Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield, and another interesting week. Even with a shortened week, we had a little bit of excitement in the trade, a lot of negativity, unfortunately, to that side. We're going to talk a little bit about what's happening in the corn and the bean basis. Unplanted acres. We just a few weeks ago, we were talking about prevent plant and how much of an issue that would be. We'll look more into that. We're going to look at cattle weights, which we know took a nice drop this week. What about cow heifer slaughters? Have they backed off a little bit? We're going to find out about that and a whole lot more on today's episode.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
And welcome back. As you can see on the screen, joining me is Kyle Bumsted. He is with Allendale, and Arlan Suderman with StoneX. And like I said in the intro, interesting marketing week coming off of a holiday. They wasted no time coming off of Memorial Day to see some negative trade, gentlemen. And I want to kind of start with how that affected the basis. So, Kyle, I'll ask that of you first. We'll take a look at the corn basis. What is your thoughts at this point?
Well, the corn basis seems to keep firming. Some of the indexes I track, we tracked it last night to running about 4.5 to almost 5 cents under the July futures. So it still says that the merchandisers are trying to source some corn out there in the countryside, and they haven't had to go to the futures to do it. They've had to go to the cash market to actually try to get it sourced by improving their basis. So looking at that, it tells us that most of the basis push has been in feed yard country, southwest Kansas, the Texas Panhandle, and even here in central Nebraska, there's been some pretty good push here by local ethanol plants, which tells us that we still got good demand here on two of the three main legs. Feed demand and ethanol demand have really kept this thing going here as far as the cash basis here, which 4 cents, 5 cents under July futures this time of year with that index is really not something you hear of this time of year.
Arlan, what about from the soybean perspective? How's basis looking right now?
Yeah, we've been seeing some tight bases. Now, some areas are weakening, and the general pattern has been where the processors are the focus of the demand. We've been seeing the strengthening basis. On the export side, we've been seeing some weakening basis, even though our export shipments have been really above seasonal levels, and we anticipate that that's going to be picking up as we go through July and August. We're still seeing most of our basis strength where the processors are, as they're really struggling to try to originate beans in some areas of the Midwest.
All right. Well, we know that outside market influence has had a lot of effects on the trade today and just this whole last week. Wanted to start out first from a dollar perspective. Arlan, are you seeing any concerns with this dollar? And as we head into the next week, as inflation continues to be talked about?
Yeah, I think the dollar is most concerning to our wheat and our protein export sales. And that's where we have the most competition. So that's where the dollar matters the most. The price break we got on wheat has actually gotten to the point where soft red winter wheat has become very competitive again. We'll probably see some of the future export reports show some increased sales of soft red winter. May even see China come in and buy 2 or 3 cargoes or something like that, like they typically do when we see that harvest weakness. We even sold a couple small handy cargoes of hard red winter wheat to Brazil on the price break. So that is starting to help a little bit in order to pick up some export demand.
Well, I know, Kyle, outside influences from a livestock perspective has got to be gas prices and increase in food prices. And that's causing for some folks to back off in their purchases. But grain prices are also an outside influence for this cattle market.
Well, that's right, Susan. And you made mention of the weights dropping, and yes, they are dropping. I believe heifers are about par with last year, and steers are just now a little bit under last year. So when you look at that, that looks good. But that data was taken here about 3 weeks ago when corn and soybeans were kind of making their highs up there, corn especially. So you saw the capitulation, the cash market side of things start to happen because if you're feeding cattle in major feed yard country and you're getting a feed bill, opening it up and saying, "Whoa, I'm paying almost what for corn? 850, 875 in the bunk." You're saying, "No, get rid of the cattle. I don't want another feed bill." And over time, if we keep that kind of capitulation, yes, it sounds ugly when the cash market does this and we start pitching cattle at these levels, but overall it will help get that front end supply cleaned up by doing that.
I've seen a lot of social media posts and videos of cows being turned out to grass, and that was the exact comment. There's more dollars off of my feed bill.
That's right, and I think you're gonna continue to see that here for a few more weeks as people turn out to grass. There's going to be a few more cows killed, and we had an astronomical cow kill here the month of May. I believe it's something like 80,000 head or something like that is what I saw on the sheets. I just scanned through it, but we haven't seen a cow kill that big in years, and I think that there still are quite a few heifers being placed, especially that came in off the wheat pasture early. That wheat pasture just wasn't doing the late wheat pasture, so they just got placed in the feed yard because at that time there simply wasn't any grass. Now most of the rain started falling out there the end of April, early part of May. So is that enough time for the grass to recharge? Maybe, but we'll have to wait and see if there's more heifers being placed coming up here, and we should get some information with that when the USDA comes out in July with their cow numbers and on their cattle report.
What about for you, Arlan? What are you hearing on outside influences from a consumer perspective? Because it seems like every day the gas prices are changing.
Yeah, it's really troubling. It's a mixed message as well. What we're seeing from the data is that the consumer overall is still cash rich. We still have that stimulus in there. We still have record levels of currency in circulation, M2 money supply. And then when you look at the bank reports of major banks that hold people's checking accounts, savings accounts, et cetera, and they're saying that basically the working American wage earner has good supplies of cash on hand. They also have record levels of equity in their homes, and so what they're doing with the relatively low, historically low interest rates yet still taking advantage of that, taking out home equity loans, leveraging themselves more on that to take on big projects, but yet they're changing their spending habits on the discretionary spending from the standpoint of food, going down the value chain, doing more less name brands and more generic brands, maybe fewer steaks, more hamburger and stuff. So that's a concern for the meat sector as we've seen that start to happen. And maybe if we could get the consumer confidence back up, they would come back to buying more steaks and help out. But that's currently the pattern that we're seeing that's really troubling from a standpoint of the protein sector.
Well, as we continue here with the Nebraska Soybean Board report being brought to you by the Nebraska Soybean farmers and their checkoff, I want to talk unplanted acres and prevent plant with both of you guys. Arlan, what are you hearing for unplant numbers at this point?
Yeah, we're really anxious to see Monday's numbers from USDA on the crop progress. If we look at this last Tuesday's report, which is delayed a day because of the holiday, those numbers were as of Sunday, but Sunday's really when the last of the planters got shut down in most cases because of rains in the northern plains. So we had about 3 million acres of corn in there in eastern North Dakota, northwestern Minnesota that were unplanted at the time. A lot of farmers were only 60 to 65% planted. And as we talk to our people in that area, they say most of them, they'll get back in the field maybe next week. But for most of them, they're done with corn. They're just quitting on the corn. And in most years, that area really doesn't matter. But this year it really does. We need every acre of corn. So that further tightens up the U.S. balance sheet, makes it even more critical that we get an above trend yield this year. And there's still a lot of question about that. Same thing, we're looking at the possibility of losing 1.5 million to maybe 2 million acres of spring wheat as well, although many of them will still try to plant spring wheat this week yet and see if they can't get it in. But we'll probably see an increase in some soybeans if the weather allows, and even more significantly, canola in that area.
So, Kyle, having said that, and you hearing what Arlan's talking about, from a livestock perspective, lack of acres, does that make you guys nervous in being able to feed these cattle?
It does. It does. And when I look out there in those far deferreds, the market's been telling us that for quite some time, that we have a tight balance sheet as far as corn and soybeans. We got to think about the hog and the chicken side of things as far as that goes. Now you look out there in the soybeans. Soybeans have been trading inverted. The November beans have been trading over the far out Julys. And some will say, well, you really can't look out that far because there's not a lot of volume out there in those far out deferreds. But it is still the commercial read on the market. And we stay up front here. We're still inverted here. That Nov July spread is trading 6 cents inverted inversion right now. Corn, same situation. We were inverted early this week. We did go to a slight carry, about a 5.25% carry here at the end of the week, which is 3.5 cents. So it's still saying that here, feed yard country, commercials, end users, ethanol plants, they still want all of your corn, all of your beans as soon as it's harvested. That's what it tells me. They're saying we're not paying you to store it. The market's not paying you to store it. So we would like to get as much as we can procured early on and get it off the combine as quick as possible.
Arlan, is it true Shanghai's lockdown is done?
Well, it not totally done, but it's
Okay.
certainly opened up a lot. And so they're getting a taste of what freedom is like. Once again, there's still a lot of restrictions, regular testing, maybe multiple times a week getting tested. So a lot of restrictions in place, but at least people are able to move around once again. And we're seeing that translate into better hog margins in China, starting to improve a little bit. Not big profits, but not the losses that they were having. So we're starting to refill some of the pens with pigs, starting to increase the demand for soybeans. It's interesting that right now, new crop soybeans demand, export sales on the books to all customers are at a record high for this time of year. Over 500 million bushels already on the books for next year.
That's great to know as we look at things happening. Kyle, real quick, what's the one thing from a livestock perspective we got to look for coming into next week?
Well, I think from a livestock perspective, we need to keep an eye, especially on these live cattle and feeder cattle spreads. The feeder cattle have done a really good job here the last two sessions of bull spreading the market here. All this week, they've done a great job of bull spreading those deferred contracts, which looks good. But really, we can only watch the August, September, and maybe the September, October a little bit. But also keep an eye on those front month live cattle. We are trading a deficit right now. The August is trading under the October by almost $6. So that still tells us that front end, we have a lot of cattle. We also need to keep an eye on our cash markets as well.
All right. Well, both of you, thanks for joining me this week and enjoy your weekend.
Thank you.
All right. That's been Arlan Suderman and Kyle Bumsted joining us. Want to remind folks that commodity futures and options involve a substantial risk of loss and aren't suitable for all investors. And that's been the Nebraska Soybean Board Weekly Market Roundup being brought to you by Nebraska soybean farmers and your checkoff.